and welcome to episode 3 of the Intelligent Automation in Insurance series. I'm Pete Melville. I'm a transformation services consulting partner in Genpact, and today I'm talking to Ed Klinger, CEO of Flock, and also chairman of the UK InsurTech Board. Ed, hi. Perhaps you'd give us a quick introduction before we get into the questions?
Yeah, sure. So hello, Peter. Thanks for having me on. Very quick introduction to me. So I'm wearing two hats, I guess, in today's conversation. The first is, as you said, I'm the CEO of a company called Flock. So we're a London-based insurtech company in that we provide insurance products and we use technology to do it. We actually insure about 1/3 of the UK's drone businesses. And we've been focused on the drone industry for the last 4 years now. What we do insurance very, very differently. Rather than providing solely traditional annual policies, which would cover your business for a year if you were to be using drones. What we do is we actually provide you with a per flight price. So we charge you on a kind of pay as you fly basis as a drone pilot or as a drone business. And the way that we do that is by pricing each and every flight independently based on the scenario of that flight. So the location of the flight, the time of day, the weather conditions, how close you are to certain high or low risk areas, and so on. And we've been building that business, as I said, for the last 4 years. We're expanding quite rapidly into Europe and Asia, and we've moved into insuring some of the world's leading drone companies and some very recognizable companies. We provide cover to companies like Netflix and the BBC, and some of the world's leading engineering consultancies and oil and gas companies as well. The other hat that I'm wearing is as chairman of the UK InsurTech Board. So this is a government initiative funded by the Treasury, which brings together a range of insurtech and insurance stakeholders, I guess you could call us. Everyone from founders of their own businesses through to head of partnerships at some of the world's largest insurance companies. And we get together once every 2 months to knock our heads together and discuss how we can actually work on initiatives that could further the UK insurtech industry and help the UK insurtech scene grow. So I'll be kind of speaking on behalf of both bodies or both companies today.
Okay, I think in the first 30 seconds you've already given us enough information for an hour's discussion, but we'll try and stick to our general format of questions and see how we go. So I'll launch straight into the first question. How do you think automation is having an impact on the insurance industry broadly?
So look, broadly, I think it's having a very positive impact for customers. And I think it's most important to answer this question from the perspective of customers, individuals or businesses who are buying insurance products. I think it's fair to say that historically, insurance doesn't necessarily have the best reputation. People don't necessarily find it particularly transparent or flexible or easy or fair. And I think that automation is actually starting to upend that traditional narrative because customers are better off as a result of the massive proliferation in technology and automation that we've seen in the insurance sector over the last few years. There are tons of examples of this, and especially over the last few years, and especially actually here in London, which is quickly becoming the world's hub for insurtech. We're starting to see some really innovative work from small companies, startups and technology companies, and actually some of the largest companies in the world, which are some of these very, very large incumbent insurance companies who are bringing automation into the way that they do business. I've got a kind of few examples that might make sense for us to run through. So, and these are just cherry picked. I could give hundreds, but claims, ultimately an insurer is here to pay claims if something goes wrong. And we're starting to see a massive rise in automation in claims. And what I mean by that is you don't necessarily now need to speak to an individual or have a series of phone calls or send an inordinate number of emails in order to have your claim paid, because companies like Lemonade, for example, in the US, are able to very quickly ascertain what it is that went wrong, make a decision as to whether or not they believe that was trustworthy, and then pay out a claim almost instantaneously. And Lemonade kind of very famously paid a claim in 3 seconds once, which has gone on, in my opinion, to set the new benchmark. This is what we as insurance providers should be striving for. But there are other places where automation has an immense impact as well. Distribution is a very obvious one. You now have instantaneous digital distribution of insurance products, products which you would traditionally have had to make a phone call and provide an enormous amount of data in order to buy this product. You can now buy instantly on an app. A great example would be Cover here in the UK, which is a car insurance product that you can kind of insure yourself as you drive for an individual day or even for an hour. And that's facilitated via an app, the Cover app. It takes minutes to get a product that would have traditionally, many years ago, taken hours or even days to get your hands on. And so ultimately that massively benefits us, the end consumer, because we're able to get access to high quality products in a much shorter period of time. So I see the insurance industry at this tipping point where automation is on an exponential rise, and I think it's a great thing.
Okay, thank you for that. And I think it leads really nicely into the next question. How do you think Flock is harnessing automation?
So at Flock, we're a technology company at our heart. We're a technology and data company, really, and we happen to provide what we believe to be a fantastic insurance product on top of that, and it's built on the technology and the data that we use. We're using automation throughout the entire stack. And so there's no kind of one place that we can point to and say, here's where we use automation. We're a fully digital MGA. I think the most interesting area where we use automation, and the reason that Flock, some people look at Flock and see something very different, is that we use automation so heavily in the pricing context. Especially on our pay-as-you-fly app product, whereby we provide instant prices for any drone flight in real time. And the way that we do that is using automation in pricing. We pull in lots of data sets that traditionally would be ignored or not even known about by traditional insurers. So when you're purchasing an insurance product with Flock for a given flight for your drone, you may be in a specific location, and we will pull your location data from your phone. And then we'll go and we'll figure out what's going on around you, and we'll build basically a real-time simulation of your environment at that very second. So we'll say, what are the weather conditions? Is it windy? Is it rainy? Is it humid? What's the visibility like? Are you near a road? And if so, is that road busy or is that road empty? And what's the average speed of vehicles traveling along that road? Are you near a prison or an airport or a school? And if you're near a school, what do we imagine the population density to be like around that school? And so what we're doing by building this real-time simulation is we're building up a really solid, highly granular understanding of the risk that you pose as a drone pilot. And with that specific flight plan that you're undertaking, we calculate the risk that you're posing to your surroundings and the risk that your surrounding is posing to you. And as a result of that, we're able to give your drone flight a score, a risk metric from 1 to 100. And we can convert that score into a price. If you're flying in the middle of a field and it's a nice sunny day and there's no one around, you're going to get a really low risk score and you're going to get a low price, something like £5 for a cheap drone. If you're flying an expensive, complex drone in poor conditions, it's windy, it's rainy, it's dark, and you're near a busy road, you're going to be paying a much larger price because you'll have a much larger risk score. And so that's how we brought automation into the process of pricing. And what that's allowed us to do is actually provide extremely bespoke, highly customized products to now thousands of businesses here in the UK and indeed across Europe and Asia. We now serve over 4,500 businesses using drones, and we've quoted over 1 million flights through our application. And so that data that we've gathered has allowed us to build an increasingly high degree of accuracy into our pricing model. And I'd say that's the most striking example of automation that we've actually pioneered at Flock.
I think that's really good. I think, and again, leading to the next question, it's got almost mind-boggling parallels with things like motor insurance and what the art of the possible might be. I guess the obvious question is, how do you think, if you like, your competitors, other insurers, currently or could harness automation to use data in a more innovative way? And are you seeing any examples?
Yeah, so first, I welcome the competition to some extent, and I think it's fantastic what we're seeing in the industry, this kind of rapid proliferation, like I said, of automation. We at Flock are just one company of a plethora of European startups and American startups which are building fantastic technologies in this space. I think pricing will, I'm biased because I'm spending a lot of my time thinking about pricing and building pricing at Flock, but I think there's a really interesting opportunity in the real-time pricing space for insurers and insurtechs alike to build much more accurate, much more thoughtful approaches to how they undertake real-time pricing. You mentioned motor, and I think that's an absolute no-brainer. I see a future of real-time motor insurance pricing. An interesting example would be Buy Miles. Buy Miles is one of the kind of well-known up-and-coming UK insurtechs. They insure personal lines drivers. So I'm actually a customer of Buy Miles, so I'm very biased here. But what they do is, rather than purchasing an annual insurance policy for your car, you would purchase an insurance policy that provides you with cover whilst your car is parked to the side of the road, and then charges you on a by mile basis as you drive. And this has absolutely taken off during the pandemic, and you would expect it to do so because so many individuals had cars parked outside their house that they were barely using because they were living in lockdown for a number of months, and you use your car less when you're in lockdown. So it's only fair and reasonable to assume that you should pay less for your insurance because you're taking less risk. Now, some insurance companies decided to actually pay back customers, £25 for taking less risks and doing less driving. Whereas Buy Miles, they only charge you that additional fee when you drive, and they provide you with a really fantastic, transparent breakdown of all the journeys that you've done and how much you've been charged for each one. So I think there's an enormous opportunity for insurers, insurtechs to pioneer this kind of flexible, real-time approach to pricing. Another huge area where I can envisage disruption over the next few years is claims. Ultimately, as I said, you purchase insurance because you need a payout in the instance of a claim. And the claims experience is the experience that most customers are upset and frustrated about when they actually purchase an insurance product. They feel like they're being mistreated. They often don't have any transparency into the process. It's a slow and painful experience making a claim. And there's a massive opportunity for companies to better leverage data and automation in paying claims and in making that process much more fair and flexible and transparent. An example here would be a company called Tractable, and again, another very well-known insurtech, which is using computer vision and artificial intelligence to actually identify vehicle damage and very quickly build up an understanding of what damage has taken place and how that damage might impact the claimant. And that's allowing for automation in the claim space where it never used to exist, in that now you can start understanding and quantifying damage extremely quickly, and therefore paying claims in a much more transparent and fair and flexible way. And so I could go on, the list goes on, but we're seeing these kinds of transformations happening now, and the next few years, especially here in the UK, are going to be really, really exciting because there are some fantastic companies working on these really quite big problems. When you consider that the insurance industry is, globally a $5 trillion industry, there's an enormous amount of change on the way.
Okay, thank you for that. I think, I know we've talked about pricing a bit. I think when you talked about, if you like, your model and how you develop, if you like, your pricing by risk, by minute, almost by flight, how do you think that data-driven, automated approach to pricing will alter insurer and customer behavior going forward?
Was the question, how can it influence behavior going forwards?
Yeah.
So
from a customer's perspective.
Yeah, I think this is going to be one of the biggest trends in the insurance industry over the next 5 to 10 years, is the trend of actually being able to influence customers' behavior and help them make the right decision in order to help them minimize their own risk. And so let me explain what I mean by this. I'll be biased. I'll use Flock as an example because I know the most about Flock, but Flock's not the only company working on this. We have an enormous amount of data about our customers and what it is that they're doing and when they're doing it and where they're doing it, right? And we also have all of the claims data that's ever come through the Flock platform or the Flock app and our web product. And what that means is we can start automating the process of advising our customers. And so let me explain what that means. With the Flock app in your pocket, you'll be able to take out your phone and plan a flight path. So you're going to go and undertake a drone flight. You'll put that drone flight into the Flock app, and we will tell you, with a relatively high degree of accuracy, a list of risks associated with that flight. We'll tell you, the visibility conditions aren't great. The drone you're using is going to be negatively impacted by the wind speed. It's probably going to rain in the next hour and a half when your drone is in the sky. there's a school nearby and there are children coming in and out of that school because it's 9 a.m. and that school opens at 9, right? So we give you a list of these risks and we give you a risk score, which tells you how high or low the risk of your flight is on the aggregate. But what we also allow you to do is plan alternate flights with different drones and at different locations and with different takeoff times. So we're providing you with a tool that allows you to not only understand your risk at the moment of the flight, but also to project and predict what your risk might be if you make a number of changes. And what we've seen, we didn't necessarily expect this when we launched the product, but what we've seen is that our customers make big changes to the way that they fly in order to minimize their risks. So they'll change the drone that they're using, or they'll delay their takeoff time by an hour and a half so that those thunderclouds have disappeared, or they'll move their flight 250 meters to the east so that they can avoid that busy public park, right? And the data shows that this is having a significant impact on our customers' ability to mitigate risk. Of the over 1 million quotes that we've issued, our customers, on average, will make 15 changes per flight. They'll change their location, they'll change their drone, they'll change their time of takeoff 15 times on average. And that results in a drop in their price of 25% and a drop in their risk of 25%. And so we've seen that there is a direct incentive mechanism through price. If you help your customers understand what their risks are, if you price those risks fairly, and if you actually empower your customers to make changes, we found that people make sensible decisions and people will actually take measures to mitigate and minimize their own risks so that they can save money, but also minimize the chance of them having a claim, which results in business interruption and everything else. So I see the future of the insurance industry, and I think we'll go on to talk about this. I see the future of the insurance industry as playing this role of actually helping and empowering customers to make positive changes to their lives in the personal line space or to their businesses in the commercial line space.
I think it's got, well, astonishing potential. I mean, can you imagine an app ringing in a builder's pocket and saying, are you really sure you want to suspend that concrete block over your neighbour's greenhouse? Because you can, but just think about it. I think, obviously you're at the forefront of InsurTech, and obviously I think a number of the players who are doing well, if you like, are also, if you like, new, nimble, agile. How do you see your insurance partners adapting to the change? And do you think they're all capable of adapting to the change?
I think that, so let me take your second question first. Are they capable? I think fundamentally every insurance stakeholder, every insurance business, no matter how large or old, is capable of adapting to change. But I don't necessarily think they all will. I think the ones which will are the ones which actively realize how significant this industry disruption that's taking place right now is. And I think that the rise of coronavirus has almost forced a large number of businesses to wake up to how rapid this change is and how much it's needed. So I think that's actually had a positive effect on automation for the insurance industry. But I think those businesses which realize how dramatic this change is and start investing heavily now are the ones which will survive. I think the insurance businesses which rest on their laurels and think that this change is going to happen more slowly are the ones which will end up being the blockbuster in this equation, who kind of fail to recognize the massive disruption of internet streaming and ultimately were disrupted by companies like Netflix, and now Blockbuster no longer really exists. I think the insurance companies that don't make dramatic investments and changes now are going to end up going in the same direction. In terms of, what are these insurers doing and do I have hopes for the incumbents? There's quite a lot that's happening in this space. And I think a common misconception is that all of the pioneering technology, although I can understand why that misconception does exist, because it's much more exciting to talk about the young, disruptive, hungry startup that's building X, Y, and Z, widget here and there. The truth is that these large insurers are into disrupting themselves internally. And, I see three methods by which these large insurers can not only stay afloat, but also actually win as a result of the disruption that's taking place. And the three methods at a very, very high level they partner with technology companies. This is method one. They partner with technology companies or insurtechs, which are doing fantastic things. They either provide capacity to them or they purchase software from them. And there are a number of examples of insurers doing this. Munich Re Digital Partners is a really interesting one. They're partnering with tons of insurtechs globally and doing really quite fantastic things and launching a range of really interesting products. And as a result, they're building quite a sizable book of premium. The other thing they can do is they build it themselves. And again, there's been massive investment by some of these large insurers who've spun up their own innovation labs or garages, often separated physically and emotionally from the kind of mothership. And these technology labs or kind of innovation practices have gone on to build some quite fantastic things and will go on to build even more fantastic things. Or finally, they invest. They actually just invest in an insurtech as a kind of equity investment. And that means that they have partial ownership over that company. They get visibility into what that company is building. And the end goal might be to go on to acquire that company and absorb it into the business so that the innovation and products and technologies that were built by that company actually end up belonging to and being operated by the company that invested in them initially. And so I see a lot of this activity happening. I think it's only going to speed up as a result of coronavirus and the kind of ensuing recession. I think that many of the young businesses that have done really fantastic things and have built some brilliant technologies might go on to struggle, not because of their own ineptitude, but because of the environment that they're in. And I think that these large insurers will see an opportunity there and will actually absorb some of these smaller businesses early on, probably at a discounted price. And as a result, will come out 1 or 2 years later with some really brilliant products because they just managed to acquire a company that was building them. And so I do see, and I do have hope for the future of the incumbents when it comes to insurtech.
Okay, thank you. My last question, but probably the most important one. What's the future of the insurance industry from your perspective? What change do you think automation is going to drive?
So I'll talk about two key themes. The first one is the one I've mentioned already, which is this idea that in the future, and I'm talking 5 to 10 years, insurance won't be about covering risks and paying claims. It will be about predicting risks and avoiding claims. I think that's going to be a massive shift. And it's going to require a mindset shift from the insurer and from the customer. As I said, insurers have these huge wealths of data that other companies simply don't have. Insurers have privileged access to enormous amounts of data about their customer, but also about the wider environment and claims that other companies would kill to have access to. And because the insurers have that data, they can use that data and they can run machine learning models on that data and predictive analytics using that data that they can then feed insights to their customers and say, hey, don't drive on that road on this day because it's covered in ice, or don't fly that drone at this moment in time in that location because it's high risk, or hey, it's time for a checkup at your GP because we've identified that people of your age and of your demographic in your location have a higher instance of this specific health condition, and therefore we think that you should be proactive with your health. I expect that insurers will move in this direction. I think that's going to be a really good thing for society ultimately, because insurers can start becoming very noticeably and tangibly value add. Rather than just saying they're value add, they can actually start changing the way that people live their lives, identifying health conditions early and helping them get to the doctor at the right time or the dentist, or helping businesses conduct safe operations. I really see that future for the insurance industry, and I'm actually very excited about it, because that's what we're trying to do at Flock. That's what we're all about at Flock. I also see, that's my vision for the future of insurance, but I see an immediate change on the way, and I can see it happening already, which is this movement towards customer centricity, right? This movement towards much more flexible, accommodating products which genuinely put the customer first and which provide a brilliant experience, whether that's because customers are able to purchase insurance products much faster online or with much more accurate pricing, or whether it's because insurance companies are able to intelligently use customer data to actually suggest the products that they might need, or whether it's because you're able to buy insurance through a mobile phone, not just through your laptop, right? I see this happening right now, and it's being accelerated. It's happening faster than ever as a result of the pandemic. And I think the next kind of 1 to 3 years, so this is a really short-term horizon for the insurance industry, are going to be fascinating for this space, because there's going to be this rapid proliferation of really quick, easy, simple, often beautiful digital products which people are going to interact with. And I think that the perception of insurance is about to undergo a massive reversal, because people are going to start seeing insurance in the same way that they now see booking an Uber or ordering a Deliveroo. Is going to be quick and easy and instant, and actually quite slick. So those are two big changes, and that's how I see the future of insurance, kind of short and medium term, and actually much longer term as well.
So I guess to sum up, the outlook looks bright. You think there's a good future?
Yeah, absolutely. I think that the insurance industry's had a bad rap for the last 400 years, and to some extent it's deserved that. But I think that it's undergoing a really rapid, dramatic transformation. And I think that over the next few years, people are going to start being really delighted by the kind of digital products that they have. And over the next 5 to 10 years, people are going to start realizing that insurance can actually dramatically improve their lives and their livelihoods. And that's what I'm most excited about.
Ed, that was really great. Thank you very much for your time today.
Thank you, Peter.
Thanks very much for the insights. They were really excellent. And again, to the audience, thank you very much as well. Thank you.